Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And we've talked quite many years about the oncoming collapse of the global economy. And you know, for so many years, the IMF stuck to their guns and said, we're dealing with a great economy. We just need to centrally plan more. All this stuff is great. It's all good. We had Janet Yellen not that long ago saying we won't see another financial crisis in our lifetime, which of course she changed her tune on a little bit since. But I mean, we now have, as of the other day at Davos, Christine Lagarde, head of the IMF, warning of a massive potential conflict in the near future for the global economy. And I just want to look at this Financial Post article because, as it says, IMF warns world economy set for weakest growth in 3 years. And as the article goes into, the International Monetary Fund cut its forecast for the world economy, predicting it will grow at the weakest pace in 3 years in 2019, and warning fresh trade tensions would spell further trouble. In its second downgrade in 3 months, the lender blamed softening demand across Europe and recent palpitations in financial markets. It predicts global growth of 3.5% this year, beneath the 3.7% expected in October and the rate in 2018. The outlook is perhaps more upbeat than that of many investors who openly fear a US-led slowdown taking hold. The fund left its projections for the US and China unchanged and even anticipates a pickup in worldwide expansion to 3.6% next year. Risks, nevertheless, tilt to the downside, the IMF said in a report which came hours after China revealed the slowest expansion since 2009 last quarter. It will set the tone for this week's World Economic Forum meeting in Davos, Switzerland. It is important to take stock of the many rising risks, said Jita Gopinath, the fund's new chief economist. IMF Managing Director Christine Lagarde said on Monday that the risk of a sharper slowdown in global growth had increased, even if recession was not yet around the corner. Speaking at the World Economic Forum in Davos, Switzerland, after the IMF trimmed its 2019 and 2020 global growth forecasts, Lagarde urged policymakers to address economic vulnerabilities, especially by reducing high government debt. Among the threats cited in the report were more trade tariffs, a renewed tightening of financial conditions, a no-deal Brexit, and a deeper than anticipated slowdown in China. Among major economies, the deepest revision was for Germany, which the IMF now sees expanding 1.3% this year, down 0.6 percentage points from October. Soft consumer demand and weak factory production after the introduction of stricter emission standards for cars was behind the shift. The fund also cut its forecast for Italy, citing weak demand and higher sovereign borrowing costs, and France, where the so-called Yellow Vest protests have hurt the economy. The overall euro area will grow 1.6% this year, 0.3 points below what it previously thought. So, John, let's talk about this a little bit because this is interesting. First of all, I still don't understand how Christine Lagarde isn't in jail. But anyway, that's a few years ago. You might.
French finance minister. It always seems to get you that position at the IMF if you're corrupt, Josh.
It's amazing, yeah, of course. And so you kind of have to be corrupt to be the head of the IMF. But it's interesting because they're kind of starting to loosen up on the fact that we are seeing serious problems and strains in the global economy, which has been clear for years, and we've warned about it for years. But of course, the fundamentals are off the table due to the level of manipulation, so we could not put a date on it. But we are seeing something happen right now. And they say we're not quite yet around a recession. When they start saying that, you know that there is a recession on the way, and maybe you should think twice about this global economy that so many still say is amazing. I know it's just in a little dip, but, you know, as Paul Krugman will say, everything's going to get better, and don't worry, it's just the beginning. You know, the internet's just a fad, Bitcoin's just a fad, but the US dollar looks great in 2007. Anyway, John, the banks are bankrupt. All these major banks are going down worldwide. The everything bubble's bursting. The stock markets are overvalued and are seeing tremors. We see pension bubbles, student loan bubbles, real estate bubbles, and at the same time, the IMF seems to be a little bit concerned about what comes next. So, John, what do you think about this?
Well, I think it's pretty obvious. We've been talking about this for years, Josh, and it's always been a problem debt. Like, it's private, it's public, it's everywhere. It's engulfing the economy, and that is what you're seeing. The reason why we're seeing a downturn in banks and so on. It's all this like mumbo jumbo about trade wars and so on. That is, oh yeah, that's the big reason why we're having problems. No, it's actually the debt. We're so over exaggerated by debt. It's strangling us. It's killing us. And of course, this I'm just gonna mention a title on a Wall Street Journal article here, which says "Chilling Davos: A bleak warning on global division and debt." Finally, they're mentioning debt in there, because I was looking up our other articles, Josh. They didn't mention the debt part in there, of course, because they don't want people to know that how bad the economy is. They're warning about some government debt. That's not.
And of course, that Wall Street Journal article, the reason we aren't able to show it to you on the screen is because it has a paywall and it's just ridiculous.
But it's enough to just tell what the actual title says, because that's the problem. That actually makes sense to me. That's the major problem, is the debt. And of course, global division is the reason why we have that, is because of this push towards globalism in the way of elitist control over a one world government. That is why you're seeing all the resistance now everywhere, like the Brexit. You have Hungary standing up. You have Brazil. You have the U.S. Kind of rejecting things, not wanting to be a part of this massive conglomerate that has been building up here. You're seeing people we're not against the globalization, which is very different, which is actually like people interacting and doing business with each other in all kinds of countries around the world. That's fantastic. But the globalism is where you have this, corporate fascism taking over the world. The big, massive multilateral corporations are in cahoots with, the United Nations and others, trying to push agendas onto people. They're trying to indebt us. They're trying to tax us to death because they're saying that, oh yeah, we need to save the world. Meanwhile, the United Nations is going out of money, so they need to put forward all these carbon tax schemes in order to get some more money to fund their global Ponzi scheme, their global corruption that's going on over there.
I'm just against the use of force. I mean, in general, the use of force against free people is a big problem in itself. And John, I mean, debt is one of the greatest ways to push people into servitude. So it is no wonder why the governments of the world and the banks of the world push people into this servitude, because it perfectly benefits them.
Yeah, and it's a natural outcome of the system, right?
Yeah, and we're seeing most of these countries just paying the interest on their debt. I mean, it's just gotten to a level where this debt is so overwhelming that it's just pressing down on our shoulders. The global debt is insane. We have got derivatives bubbles as well that are like multi-quadrillion dollar level. It's gotten to the point where it's just laughable because it's so ridiculous.
But it's all fine, Josh. It's just some trade wars going on. That's it. Don't worry about anything. Why are we talking about this?
Incredible. Yeah, it's incredible. And and everything is all the trade wars, blah, blah, blah. Yeah, this was something that was building up for a very, very long time. And I want to talk about a little thing called independence and self-sustainability and, financial responsibility, as responsibility is the hallmark of freedom itself. And it brings me to the topic of decentralization and, of course, gold and silver, which we've talked about many times before, as a historical form of preservation of wealth insurance, purchasing power. Look, it's not about investing. This is about protecting your purchasing power and having competing currencies as well. And I want to go into this Forbes magazine, John, which says gold looks like safe money amid rising inflation expectations. And as the article goes into, the back of the US dollar says, "In God we trust." However, for an increasing number of investors in 2019, the motto increasingly is "In gold we trust," as the precious metal could turn into a new bull market this year. A renewed interest in gold is being driven by a confluence of factors that include the current political standoff in Washington and the longest government shutdown in U.S. history, combined with a late-stage economic cycle, rising global debt levels, and an escalating U.S.-China trade war. Bullion prices are emerging from an 8-year bear market. Gold prices peaked at an all-time high of $1,921 an ounce when the U.S. Federal Reserve was concluding its bond buying program, known as quantitative easing, or QE2, in September 2011. And by the end of 2015, the metal had declined to a low of $1,046 at around the same time as the Janet Yellen-led Fed increased its key interest rate, the Federal Reserve rate, for the first time in 7 years. Conventional wisdom says that gold is the anti-dollar. That is, whenever the greenback is strong, gold is weak, and vice versa. Gold prices react inversely to US dollar real yields. But gold is not about inflation on its own, and it's not about interest rates on its own, but it's about the relationship between the two. Gold prices had been range-bound for the last 3 years, but now signs are emerging that it may have reached a bottom and ready to climb again. The Fed is raising U.S. interest rates and scaling back asset purchases to normalize the central bank's balance sheet, while at the same time, wage pressure and tight labor markets could lead to rising inflation expectations. And I want to also mention, John, that as far as these inflation expectations go, I mean, look at shadow stats. The real inflation numbers that you're being told is a lie. The real inflation is much higher, around 10 or 11%, as we've gone into before. But I also want to mention something that was mentioned in the article here, which is that they're like, oh, well, this is, the government shutdown is causing all these. Well, I guarantee you it's just a bubble that's been created over all this period of time. Remember, the second biggest government shutdown in history was under Bill Clinton, which people seem to be forgetting about in the flurry of left and right attacking each other and going for the neck. But anyway, I do want to go into this a bit, John, because the gold and silver issue is a huge one. It has been throughout history. We've talked about the gold-silver ratio. We've talked about how silver is really looking really good. And what do the bankers do? What do the government officials do? What do the governments around the world do to protect themselves leading up to these massive crises? Well, we know it's gold, silver, and, well, today, like cryptocurrencies, a lot of cryptocurrencies as well. What does that tell you? Maybe we should do as they're doing and not as they're saying. Kind of like, your parents growing up. Do as I say, not as I do. John, what do you think about this, this kind of rise towards, seeing gold kind of come out of this artificially spoofed bear market where they're pressing it down like a beach ball ready to bounce up out of the water?
Yeah, no, it's interesting, Josh. They've been printing so much money throughout the world, and then you're seeing there's like gold is literally like from 2014. I'm just looking at the last 5 years now. It's been hovering. It's been up to 1380. Then it goes down again to like a bottom. Then it goes up to 1380 almost again, 1350. It's like a roof that they're trying to manipulate it down to. But the money that exists now is so massive. We looked at the central bank's balance sheets. The average increase on the worldwide basis is 300+%. And talking about the U.S. Getting rid of they're in quantitative tightening, as they call it, where they sell off all these bad assets that they got on their books. They're not like, who's even buying these? Are they loading them off to pension funds? But then I actually recently just went and looked at a whole bunch of different central banks, and interestingly enough, most other central banks except for the United States are buying assets. They're increasing their balance sheets. So it's like collusion between the central banks. It's like, oh yeah, the U.S. is just trying to get in and fix and sell off. Meanwhile, everybody else is probably buying those assets. Who knows what exactly is going on? But that's what you're seeing happening. It's just this mass collusion. And
John, can you kind of go into the combination, like this issue of the gold-silver ratio, as we see kind of it reaching a peak again? Because every time throughout history we've seen this happen time and time again, and it's showed that the gold-silver ratio is very, very signatory of things to come.
Yeah, no, exactly. The gold-silver ratio is very important when it comes to predicting crises. And what you've seen is that this is happening all the time, Josh. You see a constant problem where you have the gold-silver ratio hitting a peak, and then suddenly it just collapses the economy as it happens. And when it usually hits about 80, that's when you see the problems arise in the economy. It actually starts to do that before the whole crisis happens. And currently it's about 83.77%, which is really high compared to the other record highs. And you've seen this mass distortion in commodity prices around the world compared to all this printed money. There's so much printed money. The problem is that like who's like not wanting gold and silver, like central banks. You got the BRICS buying, you got South Africa, you got Russia, you got India, China. all of them are buying up gold to protect themselves from what's coming. They see what's happening. Even Russia was talking about, maybe buying Bitcoin in order to protect themselves. I was saying that maybe in 2018 would be the year that a central bank would buy crypto, but they're not there yet. But I think something like that is going to happen throughout the next crisis.
I mean, we're seeing governments secretly do it. And I mean, remember, Bitcoin was built following the last financial crisis for the financial crisis. So we're still kind of seeing for the first time what might happen with that.
Yeah, it's very interesting. It's kind of that one big grand experiment that's going to happen now. And we can all make our assumptions. Like one of my assumptions is that, we're going to have a massive drop in the price probably just first, like gold and silver does during a crisis. But then you're going to see people like panic. It's like, oh, where am I going to put my money now? Where am I going to save my money from losing, 40 to 80%? What am I going to do? So they're going to look for different things that are outside of the banking system, like holding physical gold and silver. But then what is really decentralized and outside, it's not connected to the banksters, is Bitcoin and cryptocurrencies that are out there, as a antidote to the bankster corruption that's happening in the world. They are, the cryptocurrencies are situated to be one of the assets for people to actually flood to. We saw that in 2013 when you had a huge peak up in the price during the Cyprus crisis, the banking crisis, and the after that the bail-in that happened in Cyprus. You saw actually the price of Bitcoin rally quite substantially during that time. And it was because people started to use, and they started to understand, it's like, hey, this is actually not a part of this grid that we're losing all our money. And it's investing today and being in fiat currencies is like going to the casino. You constantly think you're winning, but the problem is on the grand scheme of things, like the inflation that looks like it's the percentage gain in the assets, it's actually not a real gain in the assets. It's your money losing value. So
John, we know a thing or two about that, don't we?
We've discussed this for a long time, Josh, ever since we started to work together about 3.5 years ago. We've seen this happen. We understood that something was going on because we actually understood a little bit of old economics and study monetary systems throughout history. When you have some massive substantial debt and how big of a problem that is. And that brings us back to the first article that we're talking about, the debt problem. And if anybody believes that gold and silver is just going to be staying stagnant, they must be lying to themselves, because at one point it's that breaking point where people are going to be like, oh, things are going to go down here. I'm going to lose all my money if I don't find anywhere that it could be in safety. And it'll be in something that's tradable off the bankster grid, which is cryptos and precious metals or any other form of commodities that people could trade with each other. Just look for what's going to happen when a big crisis is going to happen. And I do believe we're going to see similar things that will happen, like what happened in Venezuela. When the markets freeze worldwide and you get capital controls, people are going to panic. People are going to be losing all their money. They're going to probably do a last attempt to do helicopter money, trying to do minimum income, as it's called. I call it helicopter money. It was invented by Ben Bernanke.
To bring in Ben Bernanke,
Yeah, it's just like they're going to try to desperately shove money into the economy. They're going to probably potentially go into negative interest rate territory to try to force people that were saving their money into the economy in order to keep the system up and afloat, and they need more and more debt, constantly more debt, in order to perpetuate this system. It's not going to stop this whole debt accumulation until people are saying, this is enough, I can't pay my groceries, I can't travel anymore. And that's what you're seeing in France. It's a part of it, and that's what we're going to see a lot more play. Well, we're seeing it all over the world now. The Yellow Vest movement is moving to Canada. It's actually getting pretty big in Canada. It's getting big all across Europe.
So its issues are pretty confused at the same time, I'm finding.
Of course,
like the populist
but we're seeing that the Yellow Vest is the symptom of the banking system failure, right? So that's what we're seeing, and we're
occupying the Tea Party was back in 2007.
It started as an end the Fed kind of movement, right? They kind of had it to start with, but then it got co-opted, and people just tried to push other ideas to divert the attention away from the real issue, which is the corrupt banksters, the cartel that is running our world today and scamming us day and night as long as we're in these fiat currencies, John.
Yeah, these faceless movements always get co-opted, unfortunately. But I do want to also, like, man, I've been looking into this kind of stuff mostly since around 2006, 2007, when I heard Ron Paul talking about it. And I remember just right before the last crisis, which is still continuing to today. It's just prolonged and pushed off longer, and the longer it's pushed off, the worse it gets. But I mean, I remember back then everyone was called crazy for thinking about this at that time too, and talking about and warning of this stuff at that time when Ben Bernanke was like, oh, everything's going to be okay. Paul Krugman, everything's going to be okay. Folks, when are we going to learn? All fiat currencies eventually revert to their true value of zero, always have, always will, going back to 1024 AD in China. This time won't be any different. We just don't know when it's going to happen, the exact moment. So don't ask us to put a date on it, but we know that it will happen because it always has. And we are seeing all these telltale signs around the world. Countries are also swapping out of the US dollar. Yield curve is inverting. There's so many things piling up at the exact same time, which is exactly why we have to get prepared, folks. Be self-sustainable, financially responsible, like I mentioned, and look to things like gold and silver, like things like cryptocurrencies that are truly decentralized, that have fundamental value, that can be used, which we are seeing as a competing currency system in Venezuela and places like Argentina outside of the government, as the government tries to say, oh, well, like in Venezuela's case, take our Petro coin. And people are like,
invest in Petro, guys. That's a great ICO.
Petrocoin doesn't even exist. It's not even a thing. It's so nonsense. But folks, I mean, the point is, people are learning, the market is adapting, and sooner or later we will be able to replace the system. We just have to understand it. We need to know about it. We need to protect ourselves and our family for the future. So never forget. Also, another great way to do that, and I've got to mention, I want to mention because I'm pretty happy with it, is our affiliate with Mike Maloney's Gold Silver, which I have linked below. Make sure to check that out, goldsilver.com. Mike Maloney is one of the best in the business when it comes to talking about gold and silver, the history of money and cryptocurrencies, and diversification, and not being picky and choosy about it, but just talking about how both have very real values for somewhat different reasons, but all the same. It'll be interesting to see in the coming collapse of the world financial system how this works, because one way or another it's going to come down and we need to get prepared for it. John, I'm running out of time on the memory card, so what's your bottom line?
Well, the bottom line here is that we are in a debt crisis, not this trade war, and we have a huge problem on our hands. We've seen the end of the monetary system, we've seen the end of politics at the same time, seen these massive cycles like peak government and everything just hitting at the same time. But it's funny how peak government hits with peak debt. It's because the government and everything, relies and runs on debt. It's full Keynesianism. And when you see idiots like Krugman, being out there on masterclass, you hit a peak, the end of the system, Josh. It's just it. Yeah. Like, I got nothing else to see. Make sure you decentralize yourself, get out of the grid, and protect your wealth with gold and silver, and have, cryptocurrencies. It's, of course, our opinion, but that is what history is kind of telling us that we should do.
Yeah, of course, this isn't investment advice, but let's look at history. It's pretty clear what works and what doesn't, and we're still kind of testing the grounds on cryptocurrency. We will see, but I agree with John. I think it will be very reminiscent of how gold reacts, because it's seen as a safe haven. It has a faith of a safe haven, not just another fiat currency. Which, by the way, for all those that say that it's Bitcoin and fiat are the same thing, don't know what fiat or Bitcoin is, because fiat is legal tender forced on us by legal tender laws, usury, debt, and
fiat means it shall be. Like, it's the law.
Fractional reserve lending, all that kind of stuff. Yeah. Very, very different. Scarcity, application, use, and demand. What subjective value is, after all, which you can base gold on. Gold has a physicality which goes into the use case, but isn't the reason for the value, because nothing is intrinsic in life. Things don't just float around with a value on it. They are subjective based on the individual, and we've seen that with colonizations in Africa and South America and stuff like that, where they're selling their pearls for nothing. They don't want them, but the colonizers sure do. Subjective value, folks. Let's remember that. Anyway, John, we could go into all that all day. Until next time, though, thanks for joining us. And this is Josh Sigurdson signing out with John Sneisen from World Alternative Media. Find the truth.
Be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube. As these guys come in and flag all of our content, as hate speech. Also, check out our Bitcoin address below as well as on the screen for you to scan if you please. And also check us out at steemit.com. We're at Josh Sigurdson. It's a future of social media where you get paid in the upvote of your post in cryptocurrency. Steem, that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WAM, that's WAM, and I hope to see you there. Also, check out our newsletter as we are getting demonetized and censored and all that. We don't know what comes next, so we have an email, worldalternativemedia@gmail.com. Send us an email with subject line YES, YES, and we will include you in the newsletter where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.